Greetings, everybody. This is Jeff Scott. It is about midnight on Saturday. Saturday is the 17th, so this will get posted sometime on Sunday morning. I titled today, Beware Bull Traps, and I'll talk about that as we go on. Certainly, this is a difficult market to trade. Every day seems to be driven by news. I've woken up, well, I'm a man of age, so waking up at 4 in the morning is not that unusual. And I stop by and look at the futures, and they might be down 300 points, and I wake up again at 7:30 and they're up, and vice versa. Very fluid market driven by volatility. This is for education purposes only. Any recommendations are in the spirit of education and not investment advice. I am a doctor, not a broker. Sorry about that. I'm independent. I paid for my tools, and trading involves risk, and you alone are solely responsible for any decisions you make. This is an old Ian slide, and I put this here to emphasize some points. This is not Las Vegas. This is not gambling. This is not a sprint for most of us. This is a marathon. This is building a trading plan, following rules, and building our nest egg. So when I retire, I have enough money to maintain a quality of life for myself and my wife and my dog. And when I die, hopefully there's still money in the bank to go to my kids. This is about protecting your capital. This is Ian's version of what we played in the States, Chutes and Ladders. He calls it Snakes and Ladders. And if you think about it as a child, you loved getting on a ladder because you get a ride up. So that'd be a big multiplier of your money. But could you imagine if you were 87% done with your life, and then all of a sudden you hit the snakehead and you drop down to the savings you had when you were 24? You can't play snakes and ladders with your retirement. When markets are tough, when you're not making money, don't be all in. Raise cash and watch. Don't have to play. This isn't a sport or gambling. I call my education when I give it, which isn't very often, to be your own guru. I've learned from very smart people, starting with canceling with O'Neill, improved by Ian Woodward. My friends John Person and George Lee have really taught me how to trade well. Van Tharp, position size and money management, and the newest of my friends down here, Sagar from Superior Profit. Each of us have to find what style works for us. You put that together and that becomes you. You become your own guru. You don't rely on somebody else. I own lots of tools. I use TradeStation or Thinkorswim religiously, and I have a number of indicator sets, as you will see. HGSI is where I do most of my analysis, and I use EdgeRater to help me with the market analysis. And I've also become very fond of the tools from superiorprofit.co. Those of you that were smart enough to take the full year free trial, hopefully you're enjoying them. And I know Sagar has been reinvigorated in trying to teach and get news out there for y'all. Here's the website for HGSI. Again, I have no relationship financially with the company. Under free 30-day trial, you get all the tools, unless I identify them differently in the HGSI set. And under investing strategies, you can see many movies like this. Stock patterns are cyclical. You know, when I get that we're way oversold, we're coming out of and then we go into somewhat of perhaps a sideways market, and then we break out into the stage 2 greed-driven rally. It's all in, it's margin, it's everything I can. When we roll over and I get the signals that we're in a bear market, I'm short everything I can. When we're in the middle of uncertainty like we've been in, it's a tough market. So it's much easier to trade stage 2 or stage 4. Trading stage 1 and trading stage 3 is much more of a challenge. Well, where have we been for the last couple of months? Well, we picked off just the top of this picture, and every time it looks like we're rolling over, i.e. Wednesday last week, we get another move to the upside. Every time it looks like we're breaking out to the upside, we get a Monday and Tuesday like last week, and we break down. So, what do you expect this week? Well, probably will change 3 times by Friday. Um, Regardless, this is a very volatile and difficult market to win. So where am I? I've got more cash in my account. I was just looking at it than I can ever remember. I still have a few positions. I've sold premium. And then over here, I bought some puts. Um, I've been talking now for a month, and I've got some. When Amazon broke above 2,000, I ended up getting some puts. Now I've traded them out and down, just like I trade my calls up and out when I'm long calls. And so I brought my face value of those puts down a little bit, and I put $200,000 of gains from those puts into the stock, into my account. I'm still protected for a major plunge, but if I leave a $200 put or a $230 put on Amazon and it goes back up to 200, it's a neutral move for me. In fact, I'll lose money because of time decay. So I am very cautious right now, but I'm happy and looking forward to taking that off when I think the market is giving me that signal. Now, Friday was a great day to be bullish. It's a sea of green. Almost everything was up. It's hard to find any trends where there was anything down. Even energy, the bastard stepchild of late, was all green. The major markets, let's go look at them and think or swim, because I think there's probably some stories to be told. Let's go ahead and make this bigger. Come on. Try. There we go. It's the E-minis, S&P futures. And let's look at about a year's worth. So this is about a year's, August to August. And what do you see over this year? We're kind of flat over the last year, aren't we? So this has been a sideways market where a year ago, we closed at 28.60, and on Friday we closed at 28.91. So that's 31 S&P points over the year, or E-mini points over the year. That's not a big movement. So we've had a flat market for a year. Of course, we've had a lot of volatility. The big low was set in December last year. We've had a pullback in May. We're in the process of another pullback in July. And really the question is, do we get a V bottom like we had here in June? Do we get a V bottom like we had here at the end of December? Or do we have a more complicated pattern of retesting and failing, followed by a bigger sell-off? I'm in that camp, but I can only tell you what I think right now. Talk to me again on Monday. Clearly, we pull back to this 200-day, which has been support 1, 2, 3, 4 times, and we bounced even before we got to that. That's a bullish signal. We are trapped in between the 200 and the 50. The 17 days turned down. Volume on the 2 up days was lower than on the down days, so that might be meaningful. Maybe it's just Thursday and Friday are less active days. So, yes, that is better, but I don't think we're out of the woods yet. If I look at the NASDAQ futures, a little bit bigger move over the year, from 73.90 up to 76.18. So was that a 4% move over a year? Still relatively flat. Higher highs, higher lows, higher highs, higher lows. Now, is this going to be a lower high, and will we see lower lows? I think we got to be worried about that. We had a sell signal on Wednesday, a bounce on Thursday and Friday, again on much lower volume, although still good volume, but lower than on the down days. And we are in a sell signal there. That's the NASDAQ futures. I look at the Dow futures. Again, if I want to be bullish, which by the way I'm not, I'm medium. Again, we pull back, pierced the 200, closed above it. Lower volume on the last 2 days, new sell signal, and again, trapped between the 50 and the 200. So are we bullish? I'm not bullish. Not sure I'm bearish yet, but I'm certainly not bullish. Again, pull back to support here on the Russell ETF. And maybe will be something that will be interesting this week. We'd like to see the small stocks start to perform, but boy, sideways at best at the end of lower of their channel. And if we're just channeling stocks.com, that actually used to exist, I'm not sure they exist anymore, then maybe we're going to run back up here before we fail. If we look at the VIX, we'll see a spike, sort of a complex pattern of spikes. We're still above moving averages. We still are in a buy signal. So we're not out of the fire here, but we clearly eased off the extremes. And then the dollar, which is going to mean a lot to a lot of us based upon our holdings, the dollar got a sell signal early in the week. Maybe it's trying to give us a shooting star there. Maybe you'll have a lower high here. But right now, the dollar has been in an uptrend, and that's about all I can say about that. So looking at Thinkorswim, certainly on the daily charts, it looks like we've pulled back to support and we bounced. The question will be, is this something that will be sustainable, or is this just going to be a couple days and we have another leg down? More to follow on that discussion. Here's the weekly, and you can see we've had really nice uptrends for years. Most of the times we pull back to this 50 weekly, we bounced, we failed in December. Right now it looks like it's holding, at least on the NASDAQ and the E-minis. Let's look at underneath the major indices. I spend a lot of time here because, again, what I do in the market depends if I'm bullish or bearish. These are the yield curves. I point out on the right that you probably heard on the news that the 30-year bond has the lowest rates in history. In fact, it took out the bottoms of the market in 2009 and the bottom of the markets in 2016. So that is impressive. Now, I'm also hearing from a lot of people that maybe it's meaningless. Maybe with the negative rates overseas, the quantitative easing, that it's sort of changed some of the normal parts of our market. Maybe it's not relevant compared to the past. You can see the 10-year has also dropped, hasn't taken out its prior lows. And I use the 10-30 inversion. Others will use shorter term. Falling rates should be good for REITs, MLPs, utilities, dividend payers, and home builders. And I'll tell you on my top down and bottoms up review this weekend, that came true, although the home builders have been lagging. Now, it's hard to see this, and I apologize, but you can see that the spread between the 10, the 2 years of the 10, which is one of the other spreads. Let me just back up. This is the 10 and the 30, but it's the 210 that most people are looking at for a yield inversion. You can see it's pulled back almost to the zero line here. I also want to point out, again, this is the spread. This is the S&P 500s. When does the S&P 500 appear to turn down? It appears to turn down when the spread is actually going back up. And when is that occurring? Probably as the market goes into a recession, and then the Fed starts bailing it out with rate cuts. I think this may be a rare time when we've already started cutting rates, but we shall see. I'm looking for the Feds to cut, and maybe surprise us with a 50 basis point cut, and maybe even early, to stimulate the yield on, or to bring down the yield on the short term. Small caps, all right, here on the left is the small caps here. You can see in white, their AD line is turned down significantly. Here's the S&P 500 in yellow. And if you look at large caps, not the same. So small caps are really leading the AD lines lower. Now look here at the NYSE. The most profound thing is the all-time highs on the TLT. And yes, the AD line turned down. And yes, all the big guys here have turned down with it. And those are the diamonds, Qs, and spiders. Down here we have transports and the Russell. Everything fell this week except for bonds. Now, This was interesting to me. These are stocks above the 200-day on the left and above the 40-day on the right. And notice the percent came down on both of these. Not quite to extremes, but better. But then watch what happens on the very short 3-month new high, new low. It spiked up, and it's actually in reversal to the downside range, or may approach that this week. That starts to confuse me, and I think we're going to see it's related to a short-term upturn, but a medium-term still downturn on the market. The McClellan oscillator, I'm going to look for extremes here on the oscillator, the summation index, to give me a clue about a reversal. We're nowhere close. And we did have a divergence that's now playing itself out in both the daily and the weekly. The buckets, this is an edge rater where I take the stocks in the S&P 1500 and I run a test which shows me what percent over here, and this is on Friday, are below or above their midline. So we still have 2/3 of the stocks in the S&P 1500 below their midline. Now we look over here 2 days ago, it was 80%. So there was a big bounce that came into the market Thursday and Friday. We'll see how little that bounce actually was. Still, most of the stocks are below. Now this shows you just 1 day move, and it's my trading universe, which would be all stocks above 2.5 and 500,000 shares. And you could see in dashed lines how many stocks were below the Bollinger Bands or the lower decile that moved this week or moved the last 24 hours. So we had a big bounce at the week's end. Did that do anything to the overall market tone? We'll see in a few moments. Hindi's on parade. We're getting a ton of Hindenburgs firing on the NYSE. So let me make a few comments here. Not all programs are firing at the same time. Most have fired some. Stockcharts.com, which is the one that I've been going as sort of my indicator of truth, is not showing, and that's because the rising MA is no longer the way that they use it. But I do pay attention, and when you see Hindenburg omens, you remember that there has not been a major market correction in 50 years that was not preceded by these, that only 25% are meaningful. When you see more than one or two, it increases that. And you could see on the NYSE, we've had a whole host of them. Now, what was also disappointing, this is the Woody indicator, which is the third band. Green is bullish, red is bearish, is those two very strong days on Friday, which came in after a very weak day on Wednesday, did not flip this market to green. So we failed to become overall bullish despite two very strong days in the market. Now, sector strength, big shocker, are defensive with the XLRE real estate, utilities, and then over here, staples. The surprise was that we flipped on technology, and I think that's purely because Trump blinked and pushed back some of the tariff start date to allow Apple to have a good Christmas holiday. Probably a little bit harsh to say it that way, but that's what it feels like to me. Canaries in the coal mine, they're broken down. What does this look like to me? Lower high. We'll see if we get to a lower low. Right now, it looks like we're in a bear flag. We'll see if this thing turns around. I call out, let's just call it the canary in the coal mine. The one thing that makes me get a little bit encouraged to the long side is we actually triggered a Eureka on Friday. For those that don't know what a Eureka is sort of the follow through day buy signal on the markets that we see in HGSI, something that Ian Woodward came up. And you could see that the Eureka here clearly called the bottom. The Eureka here called the bottom. The Eurekas here in green called the bottom. So is this calling us a bottom? Cross your fingers if you're still very long. And then my index of leaders that I put together back in March is finally broken. It broke down this week and failed at the 50 and looks like it's heading lower. If this was a stock, I love to find stocks that break down below support, pull back into that support and fail again and short it when they move back down. Again, this looks pretty damn ugly. And you did have two opposites Eurekas, Phoenixes, and These are calculated not on whatever I put in the window. It's going to be the same on any chart. Those are calculated on the NYSE or the NASDAQ. I don't remember which I clicked off. Usually they're very similar. Know your news and your earnings dates. I've been using Econo Day. This is a calendar that they give for free. And you can see the red dots, CPI on Tuesday, petroleum on Wednesday, jobless claims Fed, retail on Thursday. And you know what? That's last week. So let's stop for a second and let me fix that. I'll show you how I get that. All right, I've opened up a web browser. Let's just go to to econoday.com. And let's go down here to view full calendar. And this is a little bit more interesting week, folks, than last week. And I'll point out what I'm seeing in a second. All right, so apparently I can't do Snagit when I'm using Snagit. That makes sense. So I just wanted to open up Econo Day here. Apologize for having the wrong day up. And I'm now looking at Monday the 19th. Interesting week. Really, when you get to the middle of the week, FOMC minutes on on Wednesday, could open some eyes, get some energy in home sales. On Thursday, we got jobless claims, but really the important thing here is Jackson Hole's Thursday and Friday, with Jerome Powell speaking on Friday. That should be big, potentially market moving. Randall Quarles is speaking after the market on Tuesday, so less concerned about that. So FOMC minutes, Jerome Powell speaks. So the news is there, and let's just take a quick look at the earnings story for this week. And I highlighted some of the ones that I'll be watching. I'll be watching all of them, of course, but Home Depot, Lowe's, Nordstrom, Splunk, Target, Salesforce.com, The Gap, maybe give you a read on some of the kiddie retail, Foot Locker, just for a few. And as it says down here, and you can't see it real well, it's, and this is a statement or a quote that I will take credit for. I'm sure other people have said it. I said it here first years ago, and that it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Twitter.com, put in earnings whispers, and every day they'll give you a report of who's got earnings coming out. Now, I like to look at the weekend because it gives me a chance before the weekend comes to impact on some of my holdings. So, short-covering rally on Thursday and Friday yielded Eureka as major markets held on support. Yet the intermediate, as we'll show you, weekly charts are still in a downtrend, suggesting a retracement is still likely occurring. Retracement in a downtrend. This continues to dive with an intermittent inversion, spooking investors and leading to all-time highs on bonds and lows on the 30-year rates. Markets pricing in multiple Fed cuts, while the rest of the world has already started to increase easing and cut their rates. I'm concerned that fears of a recession likely will keep a damper on the market for the short term, and most of us have forgotten or not experienced the bear market. But I do remember that rallies and bear markets can be ferocious, but may turn out to be bull traps, hence the title for today, and just better opportunities to short at higher prices. I have continued to raise cash and cut the number of positions. I have puts on my major positions and some on the market, but overall, I'm still leaning long just a little bit. I'll adjust my market positions as the week evolves. News flow and rates likely to drive this market at least until the next Fed meeting. For those who have followed me for a long time, you've seen this many times. This is another Ian slide, which he gave me permission to use when he was with us. Anytime you see these three little triangles on a white background, you can assume I've copied this from an Ian presentation. Ian talked about his meetings in Palos Verdes. He talked about how smart the people were in the room, Mike Scott, others, and how each month they would meet and they'd come up with a list of stocks to look at and to buy. Somebody kept tabulations and they found that in a strong market, this group of stock pickers over the next month or 20 trading days would be up 100%. Over 40 days, up 78%. Yet in a weak market, these very strong stock pickers would lose money to the tune of 32 to 50% over the first month. Now, the interesting thing here is in a very weak market, holding on did not help because you got further losses. So what does this tell me? Are we in a strong market? Absolutely not. Are we in a mixed strong? I'm not even going to give you that one. We're either in a mixed week or a weak market right now. Maybe we'll pop this week into a mixed strong and we'll all feel good about ourselves. The bottom line is these experts under Ian's tutelage could not win in a weak market. What makes you think you can or I can? Now, this was interesting. This is the Smart Money, Dumb Money Confidence Indicator from sentimenttrader.com, and this is as it was on Friday. Notice that the dumb money in red has finally broken down and the smart money has come back up. Now, as I understand it, it's when we get down to below 0.3 on the dumb money that we usually start to see the market reverse. We're getting there. We still got a ways to go, but this was a big change from a few weeks ago where people were talking about how the dumb money was so high. Here's Sentiment Trader. I do use these with permission, and I subscribe to their site. Now, of course, last week I said, look at the Argentinian bank stocks. Well, if I had done my homework, and I did before I would have bought any of them, I would have noticed that there was an election last weekend on these stocks, and that the candidate that was supposed to win overwhelmingly did not win in Argentina, and their market sold off hard. Therefore, yes, you guessed it, if the marketplace sold off hard, and it's a good chance that the stocks that you pick also sell off hard. And last week was a very tough week. This is why you use money management and stops. It looks like they opened, traded up, and then traded down as the day went. Although I didn't go long because the market here was kind of painful. But I point this out because I am not here. Let me look at this right now. Yeah, it looks like it opened up on the 12th, already sold off. So you never would have had a chance to have bought this on the 12th. On the 12th, they opened up down several percent, and therefore I don't feel bad at all, because if you follow my rules of money management, it was already down 10% when the stock market opened because of their election. You would not have bought them. But I want to reiterate this. When I say I like something, I have no idea what the market looks like in 36 hours. Nothing matters more to me than the market. So I take my whittle down buy and sell list, and I place them in the radar screen and trade station, market watch, and toss. And when I get the signal to buy, I set a buy limit. I wait for the stock to come to me. Usually my buy limit's above the high of the prior bar. I know my target, my initial stop before I place the trade, and I set those at the same time. And I use money management to determine how many shares or contracts to purchase. I guarantee without those last two steps, you will lose money, even if you are the world's greatest stock picker. So let's go look at some more charts and see if we can't find something to pay attention to this week. So I do like to very quickly go into TradeStation to show you where I was talking about the short term versus intermediate term. Let's take a look at the E-minis. And it's obviously a very strong day on Friday, plus 43 here. You run a little bit after 4:30. Notice you have a sell signal on the daily. You have a sell signal on the weekly. And I haven't said that in a long time. The last weekly sell signal that I had on this market was in May of 2019. Prior to that, I had one in October of 2018. What did the market do after each of these sell signals? We went into a multi-week decline. We still have a buy on the monthly. Notice the paint bar went blue on Friday. That is indeterminate. That means you could be going long if you wanted to. On a red bar, you should be short or hold. You shouldn't enter new longs. And on a green bar, long or hold, you shouldn't be new shorts. We have a red bar on the weekly. So maybe we've already had the damage and we're going to reverse right away. That's possible. I'll let the market prove that to me before I tell the market what it should do. But this is a market that sold off hard this week. We're down to 72% on the high jump. Notice that the weekly bongo has been red now for about 10 days. I don't see a market there that says buy me. I see a very careful looking market. Let's look at the Dow. Huge up day on Friday. Yet it's still in a buy signal on both the daily and the weekly. Let's look at the NASDAQ. Huge move on Friday. Still in a sell signal on daily and the weekly. And let's just look at the small stocks, which have been the worst of the bunch. And got the blue bar, but we're not only on a daily and a weekly, but we're in a monthly sell signal and a red bar. So, do I see a bullish looking market here? Maybe you do. I don't. So that's got me a little bit concerned. Let's look at what looks good and strong. Let's look at the dollar. Shooting star. That's interesting. MACD divergence dots up here in a buy signal. Maybe the dollar is going to slow down and reverse from here. Lower high. Can we get a lower low and get a new downtrend in the dollar? I think some people, including Trump, might like to see that because that would help us from an economy perspective, at least on our exports. On the gold, you see these red dots, we got above the envelope. We're still in a buy signal. And when I see that, I expect it to go sideways for a while, maybe even pull back. But this is a very strong market and is in all three signals are to the buy. Now, when you get down here, you start worrying about the high jump. And it was 100% on Thursday. No surprise, it sold off. Oops, a little bit on Friday, although it did move higher at the open. So, great day on Friday. Markets are still bearish, in my opinion. So let's take a look at some of the things in HGSI. Now, when I do HGSI as a top-down investor, first thing I do is I go into my market analysis user groups, hit Major Markets Plus, hit that, and that'll open up a warehouse view. Should be 25 things in this view when it opens up. All right. Now, I'm going to go to the top-down view and hit raw combo, and I can see that semiconductors were very strong in small caps, so there's a big reversion of the market in biotech, and what was weak was gold miners, gas, volatility. So that's actually very good if you're bullish. But let's take a look and see what we have with the major indexes. Yes, this is duplicative, repetitive, and all those words that my son would use with his Ivy League education. But I'm all about one thing, folks. I'm about the market. And if I don't believe that this market's going up, I'm not going to be looking at buying a lot of stocks because I like to win. I don't want to play snakes and ladders with my son's inheritance. And hopefully he doesn't want me to either. So I'm going to open up a weekly window as well. So let's talk about what I saw here when I did my analysis. All right. So we got the S&P 500 in the windows. And let me switch this to a weekly on the right. All right, so a couple of things. Here's my Hindenburg omens that fired up here. This here's a bingo, which is a baby out with the bathwater day, followed by two kahunas, which is bullish. And then what happened? We ran into the 50-day and failed. That's got me nervous. That's got me expecting a retest down here at the 200. If I want to be bullish, of course, there's two sides of every coin. I could say we just bounced off support there. So we've been living in this box here. So now the question is, if I had to put a box on this market, Can we break above this prior resistance? And will the 200-day hold? I'm worried about this market. Last week I said 3 scenarios. I'll go through my 3 scenarios again. Scenario number 1 is it's just like it was back in June, and we're off to new highs. Why wouldn't that be great if you got long positions? Scenario number 2 starts off just like that. But basically trades sideways until it resolves up or down. Then scenario number 3 is somewhere around here we fail and we go out and test new lows. So I still think that the most likely scenario is scenario number 2. I am not very bullish on this market, and it's going to have to prove it to me, hence why I have puts on Amazon, Bank of America, and a few other of my major positions. Yes, that Eureka makes me feel good, but I see a lot of red here. Let's take a look at the Dow Jones Industrial Average. Looks very similar, sitting down on the 200. And again, I could come in here and just draw something like this and say, gee, we are pulled right back into support and bounce. Isn't that wonderful? Yeah, I've got a lot of overhead supply. This is what I expect the S&P to do to come back and test. For now, until we break below or above, we're bouncing around between the 50 and the 200. I can't say anything more exciting than that. If I look at the NASDAQ, it looks a little bit better, but it too is pulled back, failed at the 50, and has a good chance of coming back here and retesting. Pulled off of support, but like I said, has a good chance of retesting. And then the Russell 2000, just a mess, below the major indexes. Now, of course, Mr. President Donald Trump, tariff man, could come out, relax, Huawei or whatever you say it, tell the Chinese he's going to give them more time and say how much he loves Xi and the fat guy in Korea. And the next thing you know, the markets go up. I can't predict that. I can just tell you what I see in the charts. Charts tell me to be cautious. If I look at the dollar, see a shooting star 2 weeks ago, attempt to retake it here. Red candle high on Friday. We looked at it in trade station, so I'll leave it enough. But the dollar is doing better than the S&P 500. If I look at the VIX, we'll see something that spiked and is now bouncing around above its moving averages. This is about as high as we got back in June, but look at where we spiked to back in December. If we spiked to 35 or 36 and came back down, I'd feel like the market's ready to go up. Right now, I don't think so. Gold and silver with the dollar showing some strength, you might expect some weakness. And, it opened, traded down, and closed back near where it opened with a doji day on Friday. This is the best looking chart I've shown you. Big uptrend on gold. I have some nugget. I've got a couple small gold stocks as well. And when I say I have them, I have calls. And because of the volatility, I have been rolling my calls up, taking profits off the market. It cost me some money to do that, so I sell out of the money calls to finance it. And then you run the risk that you get taken out by those. But I have been taking profits on this. This is just a beautiful bull move. This is the gold spider, and the one that I've been doing most of my stuff with has been nugget, just because you get 3 times the move. We may even get to see a chart somewhere. Come on. And you can see nugget pull back some because it's gold miners, not gold. But still a big move on gold. And if gold is working well, then I suspect silver is going to look pretty good too. And let's just open this up here. So I don't see a time to be heroes. I see a time to be cautious in this market. But you'll see when I go into my top-down review on the industry groups, and here's silver just pausing up here. You'll see a lot more bullish groups this week. And clearly, my view here is very short-term and looking at the last 2 days. So I've got 174 groups. If I look at 2-day force, show me momentum over the last 2 days, you can see I've got 80 to the upside. If I look at 2-day force to the downside, I have 1, precious metal mining. No surprise when you saw a nugget. No surprise that the mining index is down. So that says over the last 2 days, the market was incredibly bullish. If I look at the 5-day down, I have 45 groups down over 5 days. In the 5-day up, I have only 41. So what does this tell me? It tells me over the intermediate term, we're neutral, despite the big move on Thursday and Friday. Short term was bullish, but as I showed you on the market side, I've got my concerns. So normally I'll go the 2-day up and 2-day down list and look at stocks. I right click, change the index group, and the stocks that are above the index are on top and the ones below, and I usually don't look at anything below the index. So GE had some crazy moves this week. A hedge fund or a bear seller came out and said accounting fraud, stock sold off hard. The next day the CEO bought shares. I don't play with this. Accounting fraud, I don't want any part of it. Probably didn't happen, but this is a stock that's in a long-term downtrend. Why would I want to buy it anyways here? Maybe they'll have a big dividend, and the dividend is 1.7, not enough for me to go chase. Semiconductor devices, they benefited from the tariff delays and some good earnings. Now, here's NVIDIA. On one hand, I have a stock that had my indicator fired, had a Eureka, a Kahuna, all occurring in the market. Let me go into the regular view, not the index view. All occurring in the market on Friday. Pocket pivots, Kahunas, my signal, Eureka, weekly doji, low close doji or doji reversal. All those things are very bullish. My problem with NVIDIA is and I'm going to put on my buy list because I want to see if it can break above. The challenge I have with NVIDIA is this stock's been in a downtrend for a long time, and therefore it's got resistance. Yeah, it can move up 20 points, but this stock's in a downtrend. I've got a lot of bullish signals on this chart for another day for my live session. I'm still bothered by it's in a downtrend. I mean, clearly, if I could clear 180, I feel great, but that's $14 from here. If it breaks above the chandelier stop, which is right there, I might play a little bit NVIDIA, but I am bothered that it's clearly in a downtrend. And, I'm going to make these bigger as well. It'll make it easier to see. AMD, one of my favorites, has pulled back to a place where I've been buying it. I'm out of it right now. I do notice earnings per share growth, clearly in an uptrend, but it's very wide. Buy it when it's in the bottom of its channel, sell it at the top. And, I think we're at the bottom of our channel here. Somewhere in here. Again, I'd be buying it mostly because of its earnings per share growth. I'd be buying it because it's been a leader, but I'd like to see it break up and give me some kahunas before I would take action. Again, it just goes on a watch list. Qualcomm, you could get interested here. I'm not. I like the others better. Micron, I like the others better. Intel, not now. This one looked interesting. Sideways up channeling move, a kahuna, Eureka. Everybody's got a Eureka because of the market. My indicator, mobile breakout from a squeeze, a PSAR reversal. NXPI looks good right here. And I hope it's on my buy list. If not, it's going to be on it right now. So typically I'll go through the top 10 groups. The third is application software. Salesforce has earnings this week. Um, I'm not going to talk about earnings. I do it live. It's down here. It's been beaten up. It's certainly been a leader in cloud-based technology. It is starting to make money, although not with any earnings per share growth. Its revenue has been strong. They just had a recent acquisition, which caused it to sell off. Maybe a surprise will drive it higher, but that's playing earnings roulette. And if you like gambling, it is earnings must come out on Thursday. Workday earnings come out in 2 weeks, sitting on the 200-day moving average. Probably a good place to buy if it shows some upward momentum, but I'm not bottom fishing before earnings. Adobe, this is one that I'm playing. This is C Limited. This is my favorite pattern. Move up, sideways, buy it off the 50. Move up, sideways, buy it off the 50. Couple pocket pivots, my indicator fired. I like this, although it doesn't make money. I am long C Limited. Here was one that gave you a similar buys here. Another opportunity over here. It's already gone. Appian, if you own it, congrats. Set your stops. I also like Smartsheet, not as clean as C, but you're clearly an uptrend. You pull back to the 50. This is a chandelier stop. This is where I would be interested in buying the stock. It's got to get above my chandelier stop. So I might set a buy stop where that chandelier stop is. So I would look here, open up the data window, put my finger on that, pull this up here, and I could see that my chandelier stop is at 50.35. It closed at 49.34. So I might put a buy stop if I really want to buy this at $50.40. That means it's got to move up $1.06, take out the chandelier stop before I got interested. Now that's giving up $1, but I think if the markets are weak, it's just going to further drop, and I don't want to be in it. So I look at that chandelier stop as a signal potential to set up a buy. In fact, in my scanner, I have a scan where I look for a PPS buy signal occurring when the chandelier is just flipped, and I can find stocks that are meeting those criteria. And I don't know how the scanner is going to do tonight, so I'm not going to stick around and wait. But again, I start doing the similar type of a thing in each of the different programs. See the next group down. Number 4 is biotech. Wow, this one surprised me. Now, Exelixis had a bunch of upgrades. I've liked this for a long time. Kind of an interesting day on Friday. It must have been, I don't know if it was earnings, but you've got a Kahuna, pocket pivot, my indicator firing, mobile breakup from a squeeze. Everything is green in the magic line you crossed over. I like Exelixis. It's on my buy list for this week. Amgen, kind of a junky looking pattern. Did have a big move up, maybe a bull flag. It'll break out. Not my favorite. Big and dodgy. Then I got a couple of stocks that look like this. I'm intrigued. If you look at this box, you can see that in biotech, I've got 55% of the stocks on buys, 45% on sells. All right, neutral. On Friday, I had 52 new buys and 4 new sells. That means something to me. I see huge demand on Novavax. I see a couple move ups. I see multiple kahunas, big volume coming out of a mobile breakout from a squeeze. Look at the weekly, and the magic line was crossed. So I see something interested on Novavax. This looks like a Jesse Stein stock to me. I might play some of this, but this is a junky stock. It's just got a pattern that I like. Even if it only ran up to the 200-day moving average, that would be huge. BioMarin. Here's another one with the same pattern that gapped up on Friday. Mobile breakout in a kahuna, cross over the magic line. I like Solid Biosciences. I like them as bottom fish. I don't know anything about the companies. I'm not telling you they're fundamentally strong. I don't know anything. Do your own research, but the patterns get me a little interested. This is what happens when a stock gets good news. I should have bought it on the breakout. This was a Bible gap up, and it just kept on going. At this point, I'm not going to chase it. Its market cap went from less than $1 billion to almost $4 billion, or about $1 billion to $4 billion. Repligen has been another great mover, uptrend pullback towards the 50, mobile breakup from a squeeze kahuna, pocket pivot. I like this pattern as well. Probably put this on my watch list as well. Now, the problem I have with biotech is this is one of the big horsemen and it's not doing anything. Biogen, Celgene is looking pretty ripe, but it's in a takeover, so I wouldn't be following it or trading it right now. And I've liked Arrowhead on multiple occasions. It has a tendency to go sideways and break out. It looks like it's another good time to be buying Arrowhead. So biotech looks surprisingly good. E-commerce discretionary. Alibaba, I have position here, popped on earnings on this week, I guess on Thursday, had an even better day on Friday. It's above its moving averages. It's got positive momentum. The magic line is positive. If you think this market's going higher, I'd be buying Alibaba. Contrast that with Amazon. That still looks to me like maybe it found the bottom here. And I'm going to wait and see. You got a doji on the weekly. If I get above the top of that doji this week, I'll probably shut down my shorts. In fact, if it trades up Monday and Tuesday, I'll probably trim them. I remember this very well, 2050, 1300-ish. I had puts. I got out of the puts too early, and then I get back in them. Puts save my ass. But I don't want to bail too early on these. Maybe we're going to have one sell off and recover. I don't know. But I see the red up here, the red here. It's in a downtrend on the longer term chart. We'll see. It's at support. We'll see if Amazon can bounce. Netflix, a lot of competition. It's broken down to 200. Right now, it's dead to me until it shows that it's got some momentum. Right now, all the momentum's to the downside. JD.com, except for being so loose, looks interesting. Breaking out here had some good earnings. Weekly looks pretty good. I'll probably put that on my buy watch list as well. So I usually go through the top 10. We'll look at some regional banks made this, but the stocks kind of all look the same. They sold off hard. I have bought some Key Bank and got stopped out. And you can go through these and see a lot of stock pull back. Here's one to support, below support. They all had a big move on Friday. I'm not sure why, considering the weakness in the strength of the dollar, perhaps, but the bad rates. Here's the KRE, which is a banking ETF. And you could see it looks like all the stocks. So this is interesting. I just saw this. Now, let me go over a little bit about my buy signal. So there are a number of gurus I follow. I will leave it at that. I am working with one of the gurus of creating an add-on for HGSI. It's taking forever. I'll take some responsibility for that. To entice the guru to work with me, I made up what I thought his indicator was and paid George a lot of money to program it into HGSI for my personal use. That indicator is what I use as a buy and sell signal. I'm tabulating that buy and sell on every stock in the universe, and I know that in regional banks, although only 55% are in a buy right now, 172 flipped to a buy and 9 to a sell on Friday. That's a very strong signal. So something is going on in regional banks. The charts don't look great. Something flipped there. Consumer finance. This is a stock that I've never understood, and it continues to be a leader. FIS, it's a little expensive for my taste, so I move on. I serve. You want to buy this off of support. It's already running. Fleet Core Technologies, here's one. All the credit cards are looking similar. Sideways move. Give me some momentum. It's in a good buy position. Global Payments below the 250. Green dot. All right, so the credit cards are not there. Oh, it's because they're doing it alphabetical. Dumb, 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 dumb. Hate when I make mistakes like that. Here's Visa sitting right on support. Looks very enticing to me right here. And MasterCard similar. I'd like to see some momentum come in. I do notice the weekly charts don't look as, at least on Visa, didn't look as great, but these look enticing as well. REITs should be strong with low interest rates, and they are, especially those that have good yields. Right up at the top, 2 out of 3 are some of the ones that are involved in data centers. This is CyrusOne, had a breakout on Friday, pays a 2.6% dividend. Look at the huge yield growth coming in earnings. Prologis does a lot of warehouses, nice solid uptrend. You could buy it off of support, multiple kahunas. Pocket Pivot, my indicator in a setting of Eureka, mobile breakout from a squeeze, 2.5% dividend. Digital Reality Trust, very similar to CyrusOne, but hasn't run much, pays a 3.4%, also huge earnings growth. Equinix. So no surprise, a lot of these look good. I liked Alexandria Real Estate as well. Sideways move, 2 kahunas, that always gets my attention. Mobile breakout from a squeeze, magic line is positive, 2.6% dividend. So the REITs look interesting. Internet-based services, I'm going to go down and look at first 5 or 6. This is Pivotal Software. This is a takeout story. Suppose we go down to 15. I'm not willing to risk $1 up to go back down to 8 down. Quotient, kind of beaten up. Got to make sure you go in alphabetical order, Jeffrey. Not alphabetical order, from the list there. Tags, nice breakout on Friday. I'm not sure why it's not a Bible gap up. Probably didn't get it on volume. 5.7 million, 50 days, 2.32. Surprised that that's not a Bible gap up. Let's just see if it made it in TradeStation. Give me a second just to stick it in. PAGS. Yeah, but it was a Bible gap up. I'm not sure why it didn't show that in HGSI. It should have been a Bible gap up, so we'll leave it at that. That looks interesting, although it's had a big run. Uber, no thank you. Match.com, that's not my stock. Here's another monster stock, Shopify. I don't get any better than this one. One of my neighbors is in it. I looked at it back here. I'm kicking myself. This thing has doubled since January, 150 to 360 some dollars. It still looks strong. It had great earnings. Apparently, they power a lot of things. Look at this, 14-0 buys on Friday in its group, Internet Services. I like Coupa. I bought some of this on Friday. Nice move up, pull back to the 50. Pocket Pivot, Kahuna, My Signal Fire with Eureka, mobile breakout from a squeeze. And why I like this setup, let's play with this a little bit. I like it for very simple reasons. And then why I don't like it. I like it because I know where to set my stop. This is an expensive stock. Let's say I was putting a buyout for Monday. I would say buy it if it goes above 139.75. I'd probably put my stop below this star's low, which is 128. So that's $11. I'd probably look up here. Where is the 50 at? 132.40. So I put my stop at say 132.20. I bought it at 139. I'm risking $7 on a So I'm risking about 5.5%, 6%. It's much easier for me to set stops when I'm dealing with a stock that's been going sideways. It's a lot easier and a lot closer to my buy point. I like this. I like the pattern. I am a little nervous about the chandelier being above. So that's my caveat on Coupa software. And then lastly, we'll look at specialty pharma. Decipher had some positive news come out. It's already had its run. I'm not going to face it. Amarin, I think, is going to make a move. It sold off hard here because the FDA is pushed back to December when they're going to rule whether or not their big drug prevents cardiac disease. I'm a doctor. I'm not a cardiac doctor, but I've talked to a lot of my friends who are starting to prescribe Vasepta off-label. This may be the first fish oil-related entity that actually reduces deaths from heart disease. I like this. I've nibbled on it. I recognize that it's a bit of a long shot because it's going to have a approval risk. Guardant, nice uptrend. We've talked about this before. Molecular testing company, veterinary health company. Look at this. There's something I can buy. Nope. All right. So we've gone through. We've looked at my the top 10 groups. We saw there very little on the shorting side. So if that's the case, then why am I so neutral and not jumping up and down and buy? Because I'm still concerned that we might be in a bull trap here, that we're going to run up and fail and test out new lows. And because of that, because I'm too old to be playing chutes and ladders with my money, or in Ian's world, snakes and ladders, I'm being more cautious. I'm willing to give up some gains, potential gains, to avoid getting my ass handed to me with losses. So let's just look at what I picked. Many of these we've seen already. All right, this doesn't belong there. I'll have to take that out. Let's see if I can take that out real quick. Good. So there are a number of biotech that we looked at that I liked. I added Insight as another one. There was a bunch of REITs that I liked. I called out why with low rates. On renewable energy, I wanted to show you Enphase. This one has just been on fire. It's got a little bit of a pennant, and I expect this thing to go higher. Look at the fundamentals on this. Look at the demand. So I may add to my position there. Many of these I already own. Many of these we've already reviewed together. Low rates should be good for REITs. It should be good for MLPs. Here's one here, Magellan Midstream Partners. Looks like it wants to break out above its chandelier, mobile breakout from Sweden, Kahuna, and it pays a 6% dividend. It should be good for utilities, and it should be good for dividend payers, and a lot of the REITs are dividend payers. On that note, I'm going to almost say goodbye. You can stop this and write these down if you want to look at any of them or watch them. And I want to just touch on what I do in TradeStation. And I showed it to you. I should go back and explain it to you. This is TradeStation. This is MarketSmith, Market Watch. This is Thinkorswim, Market Watch. One point, so let's just go to my buys. I don't always update this, but let's update these right now. Come back. All right, so these were the stocks that were interesting to me. So I can either have them in a watch list here. Notice my watch list tells me next earnings date. And this one tells me QD, and they just had it, I think, on Friday. In TradeStation, I have from a guy called the Guru, a free indicator of earnings. Okay. In TradeStation, I can look at cigar signals with Q, some of the ones that I like to look for. I found that these were very helpful to me as I look during the day for stocks that are setting up to buy. Bounces, breakouts, box, headwinds, entries, reversals. From HGSI, George Lee, and others, some of the things that I like to look at are in the next group. I like to pick up green candle lows when they occur. This is a reversal signal. Red candle highs, reversal signal to the downside. I look for stocks in a squeeze. How about mobile breakdown in a squeeze? Mobile breakout in a squeeze. Just shows you the strength of the market. There were no mobile breakdowns in a squeeze in the 1,000 stocks here that I'm monitoring. I can look for pocket pivots occurring during the day up, or even though Morales doesn't talk about them down, I'm not sure they're meaningful. And then as already demonstrated, look for Bible gap ups occurring. In fact, I know when there's a gap, and then I can watch the volume throughout the day. If I go to the right, I already showed you the earnings and how many days to earnings. So these are stocks that I might be following, and these tells me the ones that have earnings coming out on Monday. And then I have John Person signals programmed in here, and I'm looking for new flashing. Now, when Monday, the market opens up Monday, these flashers will be solid because flashes are occurring on this market day. And these are the ones that started flashing on Friday, new signals. But on Monday at the open, those will be solid, and we'll wait for new signals to come in. And in Market Watch, I've got similar things that I'm looking for as well. Now, I work full time. I'm able to make money trading despite working full time. I do it by doing my homework, identifying stocks, and often putting in conditional orders. And the reason when I put a conditional order, I usually have to take out a certain high is because if the market gaps down. So let's look at one of those banks. And then I really have to say goodnight, and you have to have other things that are more important to do. Let's look at GGAL. This is one of the banks that I liked last Friday. And let's talk about this. A lot of things going on. All right. So I looked at this last week and I said, wow, this looks great. I mean, we had a whole host of these banks, all with the exact same pattern. So I said, I like these. Got a lot of new buys came in. This is on this Friday. So I'm very interested in this. I had a kahuna, a pocket pivot, a mobile breakout from a squeeze. Now, if I was going to buy that stock, I would have opened this up on my own. I see the high of the day is 38.69. I would put my buy order at 38.75, say. I would put my stop probably, since it's far down at the bottom, at the open of the prior day, which was 34.90, so maybe 34.85. That's a $5. That's a wide spread. And that might be a reason to a $4 spread to not take this trade. But what would have happened on Monday if I put that order in with my broker? If the stock trades above the high of the prior day, I want to buy. Oops. Do I get filled on this? Hell no. Excuse my French. I never would have hit triggered. So even though I was looking at them, I didn't buy any of them. They all died before the market opened. And if I look in here, more info from the web, look at FinViz. Wire financial stocks collapsing, and it was because of an election. So on that note, I want to say goodnight. Thank you for joining me today. I hope you got something out of this. I know I cover a lot, but this is what I do. This is how I trade. And welcome to those that are new, and I'll see you again sometime. And the next couple of weeks, I may get intermittent on this. It's summer. I expect some sideways markets, but we'll see. Y'all have a great week. Goodbye.